Hello, everyone, and welcome. Today is Money Management Day, and we are continuing with our question and answer session on term insurance. And this is part two of two parts. Well, we'll see how today go, and then we'll see if it's going to be two parts or three parts, right? So if you missed the first question and answer video, I have included the link in the description below, just for your convenience, so that you can watch it whenever you get the chance, so that you don't feel that you've missed it out, right? So for those of you who are joining for the first time and wondering who my guest is, my guest is Glen Griffiths. And Glen is a financial advisor as well as an authorized infinite banking practitioner. And he offers his clients customized services that will help them to be more efficient in their finances. And who does not want to be more efficient these days? Glen, welcome again.
Thank you, Genese. Great to be back.
All right, so Glen, we just want to continue from where we left off in our last video. All right, and I'm just going to get right into it, right? So my first question in this session is, how does term insurance actually work?
Good question. So term insurance, any insurance really is, I shouldn't say any, term or permanent sold by an independent advisor like myself is a contract between you and an insurance company. And what that contract says is you pay whatever the premium is that's agreed to. And when you pass away, if it's while that contract is still in effect within that term, they will pay out to your beneficiaries that face amount, right?
Okay.
So it's there to cover a temporary need. Now, temporary could be a year, temporary could be 40 years, but it's there to cover a temporary need.
All right, good. And my next question, Glen, is will term insurance premium increase?
Short answer, yes. And let me explain how that works. So typically we deal in term 10, term 20, and of late there's been more term 30 and some term 40. So let's start with the cheapest one, term 10. It is the cheapest because it's a 10-year term and a 10-year schedule of payments, right? So it's going to be the cheapest because it has the shortest schedule. But what happens when that 10 years is done, it renews. It doesn't just die, depending on your age. It automatically renews. Let's say you're a 40-year-old, right? At age 50, it doesn't die. It renews and it goes from, let's say you're paying $50 a month. It goes now to $170 a month. Now, most people go, oh my God, why? Well, here's one of the things behind pricing. I might get into that a little more. The companies realize that a certain amount of the population will be in a position where their health is not the same. It's actually not gotten better, it's gotten worse. And those people will likely just hold on to the term. Those who are healthy, if they notice their payments, they'll generally just go apply for a new term, right? But they're always gambling on health. One of the great things though is regardless of what happens health-wise, that premium schedule that you have in the contract cannot be changed. They can't come back and say, you know, now that you have cancer and diabetes, we're going to charge you more. No, it's a locked in contract between you and the insurance company that they have to honor.
Okay, makes sense. And so would there be a best time then for people to buy a term insurance when they're buying term insurance?
Generally when you're youngest, because insurance costs more the older you are. And here's the mere reason why. It's a simple calculation. You're closer to death. There's one way to put it, right? If life expectancy is 85 and you're 40, you're closer to death than somebody who's 35. So it costs more. So it's generally cheaper, less expensive to buy the younger you are.
So then when you're younger and when you're healthier too, right?
Yes. Thank you for adding that in, because your health does play a huge part. Health and habits, right? So, you know, do you smoke? Then you're going to pay more than a non-smoker, right? Do you like stuff like adrenaline junkies, like to jump out of airplanes? Then you might have some exclusions where they say if you die from that, we're not going to pay out. Or so there's a few variations, but for the most part, it's sex, male or female, sex at birth, I should say, health, and habits.
Okay, fair enough. All right, so see, I've watched this video, I like it, and I said, oh, I want to get a term insurance. Where do I get term insurance?
Well, you can get that anywhere on the internet. But however, you can definitely contact me, Glen Griffiths, Griffiths Insurance and Financial Services.
Okay.
I've been at it for 20 years. This is my 20th year of doing this, and I've helped hundreds
Congratulations.
to thousands of people. Thank you. Get their families covered, right? So yeah, reach out and we can get you taken care of.
All right. And I know a lot of time persons are concerned about price. And can you get a term insurance to fit anyone's budget? And I mean, I know that's a vague question, Glenn, so you're probably going to have to clarify it a little bit more. I mean, I want a term insurance less than $50. Can you find me that?
You know what? Depending on your age, health, and habits is possible, but it also means that you'll probably be getting less coverage too, right? So it really just depends. Different companies, they don't all have one uniform price, right? Some might be $1 more, some might be 20 cents less, some might be $5 more. But different companies do have different little nuances too, where they might offer some additional things, or later on, maybe stuff you're not even thinking about if you're thinking term insurance. How could I turn this into permanent? What are my options? Some companies just have better options down the road, right? So yeah, pricing will be different depending on where you go. And it depends on health again and habits. Different companies have different little sweet spots where they shine, they might outshine others. And that's where somebody with the expertise and who's also independent and deals with quite a few of these companies can help you get to the proper place for yourself.
Okay, fair enough. And will term insurance cover accidental death?
Beautiful question. So I'm going to tell a story, but you know, I've spoken to folks over the years, and they go, "Oh yeah, no, I got this term insurance from the bank." I'm like, "Okay, how much is it for?" I think 500,000. How much are you paying for it? $8 a month. I'm like, that's let me see it. That doesn't jive. And generally, when we look at it, what it is, it's accidental death insurance, right? So it's better than nothing. As I say to them, if you die of an accident, it pays out. However, if you die of an illness, that's a no-go, right? Now, tell that little story to come back around and say, if I'm going to set you up with an insurance policy, then it's going to be one that pays out accidental, because here's what it covers. It covers you dying, period. If it's accident or illness, it doesn't matter. It's going to cover both. So a underwritten insurance policy will cover accidental as well as illness deaths, right? An accidental death policy won't cover if you die from illness.
Makes sense. Okay. So if you take out an accidental death, it only covers accidental death, but not illness. All right. But if someone should come to you and then do a term insurance, then it would cover any type of death.
For the most part. So here's a few exceptions. And I use this example. If you're in a bank, somebody comes and robbing the bank and you get shot, you weren't the criminal. So yes, it covers your death. If you were the person who came in to rob the bank and you got shot, you're out of luck because you're committing a crime and it's not going to work in your favor in that way, right? If you commit fraud, for example, people say, no, I'm healthy, I've never had anything happen. Yet we check your Facebook, we find out 3 years earlier, you were in hospital in the cancer ward and everybody was kind of helping you and, you know, thankfully you got better, but you forgot to mention that important factor. Then you fraudulently enter into a contract. And yeah, that's not going to work in your favor. So what I tell people is be very honest. It is better you know up front that this is either going to cost you more or you don't qualify than to be paying for something that your family thinks they're going to collect on and they won't because you wanted to just not disclose certain things. So it's always better to disclose even if you don't get the result you want at the beginning. When it counts, you know where you stand.
Interesting. I always hear that less is better, but now you're saying more is better. So for insurance company, the more information you give, the better then?
Okay, yes, and I'll give you an example. I mean, I use the example of cancer, right? 3 years ago. It's not something you likely forget, unless maybe you had brain tumor, and it probably affected your memory section of your brain. But then again, yeah, it's not something you likely forget.
Okay.
Now, if you're 40 years old and you broke your arm when you were 5 and went in the hospital and you forgot that, that gets old. They're not going to hold that against you.
Okay.
I know the perception sometimes insurance companies sit there and they go through your whole history and they go, you didn't mention that you went in for a cold to the doctor for 6 years ago. So because of that, we're not going to pay. It's not like that. Really, it's not like that. TV and movies have had a field day with that, right? But big, very obvious things, if you're saying, I've never done anything risky and you're showing yourself skydiving or rock climbing, hanging off a cliff with 2 fingers, yeah, that would have affected how the policy would have been underwritten, right?
Okay.
So that's material to the underwriting, which would have changed the outcome, which does change the outcome. So
Okay.
it's just better to just disclose and find out where you stand, as opposed to be paying for something that your family thinks they're going to collect on that they won't.
All
Right.
right.
So
So then, I
it'll
mean,
mix back.
and so then you actually answered the next question I had, because I mean, my next question was, can a term insurance claim be rejected? But based on what you've just said in the previous questions, term insurance can be rejected. So,
It can be.
right. Okay.
Right. And if another big one, I forgot, Genese, sorry. If you commit suicide within 2 years of the policy being in effect or reinstated, then there's no payout. After the 2 year mark, there would be a payout. So again, another thing that you see in TV and the movies, it was suicide, they won't pay out. If the policy is more than 2 years old or been reinstated for more than 2 years, it would still pay out.
Okay. And for all our tax conscious people, is term insurance taxable? Is the claim, I should say, is term insurance claim amount taxable?
Okay. For the most part, no, but let me qualify that. If you bought insurance in a company name, with the company as the owner and payer, okay, and you were to pass away, the debt proceeds would go to the company tax free, but for it to be paid out, it is possible that you could have some taxable portion. And I say possible because that's going to be a whole different class, but you should be able to get most of it out through what's called a capital dividend account. Again, I'm not even going to go any further into that. So there's a possibility that some of it could be, but if it's personally owned within Canada with Canadian residents, then no.
Okay, and I probably should add too for this question that if you're unsure, probably go and consult your accountant, because that's where their expertise is as well, right? So if you have something specific to your need and you want to know what's taxable, what's not taxable, yes, we're giving you basic information, but things specific to your circumstances, then of course I'd advise go to your accountant, right, Glenn? I think that's the best
For
bet,
that
right?
part of it, if it's company related, yes, but if it's personal in Canada, not taxable.
Okay, all right. So my next question for you, Glenn, is can term insurance be extended?
That's interesting question, and I'll say yes, and then give you an example of what I mean by that. So typically, let's say I buy a 10-year term or a 20-year term. I'm 40 years old. Okay, say I buy a 20-year term. I get to 60, the insurance doesn't go away. It's going to substantially increase in the price, but that 20-year term is technically extended till I'm 80 because the contract ends at 80. So the initial term is done, but the new term kicks in at the higher price without anything underwriting wise. So if I have bad health, it won't affect it because it's just a continuation. So that first 20-year term is done, but the policy doesn't expire till I'm age 80 or 85. right? So in that case, it can be extended. There's a couple of companies that will let you renew right up till age 100, but not very few do that. You also have the option of doing what's called a conversion into a permanent plan, and that will cover you for the rest of your life if structured properly. So those are the ways where it can be extended.
Okay, great. Good to know. And can you get your premium back with term insurance?
You know, I'll say this, for the most part, you don't, but I've come across a couple of old plans, plans that were about 30 years old, where I took over servicing some policies about 8 years ago, this gentleman and his wife, policies that were in effect for about 30 years. And he said, no, 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 when I get to 65 with this, I get my money back. I'm like, yeah, you must be reading something wrong, right? Because I had not come across that before. And he brought me the contract. I looked at the contract, and it was indeed where if you didn't have a claim by age 65, it was built in that you would get a return of premium. So they are out there. They're few and far between, but they are out there, and most of them are older contracts. I'm sure some carrier that I don't necessarily deal with probably has something like that these days. Now, understand as well, in order to get that, you don't get nothing for nothing, something for nothing. You generally pay a little bit more, but it is a possibility. However, and I'm gonna say this because I have to, because it's just me. Same thing happens. If you do a permanent policy, you pay into it for 20 years, you can get all your money back if you want to. Because when I say permanent, I mean participating whole life. You could, right? And that one's not going to be a speculation. It's going to be there. But anyway, we'll continue with our term focus date.
Yes, great. And do you have to do a medical to get term insurance?
You know, it depends. Now, for the most part, COVID has been just a scourge for a lot of us. But you know what? For a lot of people, it's worked out well. And surprisingly, to most people, for insurance underwriting, it's actually gotten better. So I'll give you an example. There's some companies who said after $250,000 or after 500,000, you would have to do blood and urine and get your blood pressure checked. Well, when COVID came in and nobody was going anywhere, including the nurses who come out to see you and administer those tests, a lot of them said, we'll raise it from 250 to 5, or someone said, you know what, up to the first million, if you're healthy enough, if you're under a certain age, and you don't answer no to some of these questions that we need more information for, we'll just do a quick, what they call medical information board hit. And if your information looks correct, we'll just underwrite you without doing a full medical, right? So it depends on how you answer those questions and your age and the amount. Those are the big three factors. But no, a lot of policies have been issued where there's no medical. Children's policies, most of the children's policies I do, done a policy in the last, so was it just late summer on a 8-day-old, because grandpa was ready to go from day one. And no, you know, done policies on teenagers. No, I did a policy on a pregnant 34-year-old who was just about the 6-month mark, and there was no additional information because her medical history was clean and she hadn't had complications. So it really just depends on age, health so far, and the amount that you're applying for.
Okay. So you mentioned whole life policy. Can I change my term insurance to a whole life policy?
Yes, you can. Let me back that up for a second. I'm licensed with almost about 20 companies. Most of them have a whole life option.
Okay.
Quite a few of them have a participating whole life option. There are a couple though that only offer universal life. Every insurance company that I deal with has to offer what's called a permanent solution for conversion possibility. So when you have a term, there has to be something permanent to convert to. Like I said, a couple of them only have universal life. Some have universal life and whole life, and some have just whole life options. But they all have something that you can convert to. And conversion just basically means it's like a rent to own. Okay. Most cases you can convert up till age 70 in most cases. So even if I have a term 10 at age 30, it could renew at 40, price jumps up. Could renew at 50, price jumps up. Could renew at 60, price jumps up. Right? And then it's going to renew at 70. If I get in before that window and I convert it to permanent, then I will get whatever the cost would be for another, let's say I'm a non-smoker, another non-smoking male of the same age who is healthy is what I would get if I got a healthy reading at the beginning. So even if my health is really, really bad at the time, it won't matter because the contract says, and this is why having your own individual contract with a reputable insurance company who specializes in doing life insurance is huge. The contract says if I was a 30-year-old non-smoker and now I'm a 60-year-old smoker and have health issues, if I want to do a conversion on my policy because I got it as a 30-year-old non-smoker, I can get it as a 60-year-old non-smoker who's in good health.
Okay.
For the same price as one walking off the street who'd get a whole life themselves. So that's another huge bonus that I say companies have in their contract that most people don't even think about, because when they're thinking of term, they're generally thinking of covering off a need and they just want to get that done and they're not thinking down the road, but I've always got that in mind. Right, so yeah.
All right. And would you say that there are age restrictions? So I want to deal with the youngest or the oldest. So what's the youngest? Can I take out a term insurance? And what's the oldest I can take out a term insurance?
Well,
Two separate questions.
Here's what I'll say. There's a couple of companies where you can do term on kids under 18.
Okay.
Again, if you're that young and you're getting it, I'm going to recommend permanent because it just makes way more sense. However, I have had where one parent, I only have one where I've sold term where the child was a 12-year-old boy because the dad's like, nope, I just want term. So we did a 30-year term on the child. I kind of said, permanent will be better. But again, that's what he wanted, so we did that. So there's a couple of companies that'll let you do that for under 18, but for the most part, the companies will let you do from age 18, and you can generally get a term up till 75 in a lot of cases, because if you're going to do a 10-year, then you need at least that time period before the policy would expire in order to get it.
Okay.
Right? So if it's going to expire at 85, then you need to be 75 max to get a 10-year term.
Okay. So what would be the benefit of me? So I have a child and I said, okay, my child is 10 and I want to take out a term insurance. And you did mention that you've done term insurance up to 40 years as well, right? What would be the benefit if I should have a 10-year-old and I said, you know what, I want to take out term 40 on this child who is 10 years old? What would be the benefit of doing something like that?
The benefit is the child would have insurance and the child would have a fixed cost insurance for the next 40 years. Again, I'd probably try to say do something permanent, but at the end of the day, if you want to do a term, the child would have term insurance at a fixed cost for the next 40 years. And the beauty of it too is this, never forget this, as I keep saying, if they later determine that, oh, maybe I should do permanent, because they already have the term, they can convert it without any medical underwriting into something permanent. So it's almost like a rent to own, and I put it that way, right?
Okay.
So yeah.
And is that only for the child that they can just convert it because the child is young? Or could you, if I was at 30 and I took out a term 20, would I be able to convert that as well?
Good question, good question. Conversion is generally contractual for whoever's covered, right? So if you're 60, you can do a conversion typically before age 70. If you're 69 and you wanted to buy a term, I actually sold to a 68-year-old gentleman a couple of years ago, letting him know that he had 2 years max to do a conversion. He did it in less than a year, but say, yeah, you got 10 years and then this thing goes up astronomically. It makes sense to just convert some of it into permanent where you build in a little bit of cash. And anyway, well, yes, you can convert up to a certain age, most times around age 70.
And if you're going to convert, would you have to decide at the time of signing that insurance that you want to convert?
Fantastic question. No. Short answer, no. Conversions come down to when you want to do it. And companies, you can do partial. So let's say I have $1 million term, right? And at some point after, someone meets with me and we chat and we see that they have the means, we go, you should convert some of this into permanent. And they might go, I don't know. Okay, what's the minimum I can try? Well, depending on the company you're with, because they've all got their own minimums, some will be 100,000, some will be 50, some are 25. So that person might say, you know what, I'll convert 100,000, I'll pay that premium, see how I feel about it. And then, so what would happen is we take 100 off that million, turn that into permanent, and the other 900 continues as the term.
Okay.
Right, so they've still got a combined million to start with, but 100,000 is now permanent, and the other 900,000 is term. And if they decide to convert pieces going forward, they could, or they could convert the whole thing if they could afford it.
And will the insurance company usually require for you to do a medical if you're going to convert?
Conversion is contractual and guaranteed, right? So no. If you're trying to do some additional things or get a higher amount or be able to put more cash in, and that's going to be a whole different video, then you'd have to be underwritten for that piece of it. But to do the conversion dollar for dollar, no underwriting. And that is why I say it's one of the most beautiful things about a term policy that most people won't think of or even be concerned about if you mention it, because they're thinking, I just need this now. But it is built in that later on, you can do that regardless of your health at the time and habits.
Okay. And, I think I've exhausted my questions. I was trying to see how much I could get in as much in, and some of the questions that I had on my list, you pretty much covered them while you were talking and answering other questions. So, I did get most of my question answered. I don't know, as I say, if there are persons listening, if you have questions that you want us to answer, if you want us to do a part 3, we can do a part 3. But Glenn, that's all my questions on term insurance. If there was anything that you forget to, we can always add it. But I think we've come to the end of part 2 of our video for today. Very interesting topic. So
as you can tell, I love going over it, right? And one thing to add, because I just want to say this, I have a friend who's about to have a baby, and he was about to get some insurance, and he loves the permanent. He wants to do the permanent, but his spouse is going on maternity and he's about to have a baby. And I said, you know what, considering your cash flow, you might be okay, but let's do the term. Give it at least till about 6 months after baby's born, just to see how you get used to less income and more bills. And then if you're still comfortable, we can do a partial conversion. And he loved that because he kept thinking he had to make a decision right now. I'm like, no, do the term. At least you're covered, because life is weird. Anything can happen.
Of course.
So at least you're covered. If something happens to you, your family's protected. But hey, 6 months or a year in, if you want to still do it, we can do that. And if you decide to delay, then no problem. You still got the coverage. And if you never convert, you've still got some coverage right now, right? So that flexibility.
Well, thank you so much, Glenn. Thank you for your patience with all my questions. And I will let you know. Yeah.
As you can tell, I love talking about this stuff. Look, Genese, I didn't know so much. And as you said, you at one point didn't know so much. And when you don't know, you end up doing not the best things you can do for yourself. So I am so glad to share this information with whoever is curious and wants to see it. So as you can tell, I light up talking about this stuff. I love what I do.
Nice. So, to our listeners, if you found this very valuable, please remember to give us a thumbs up for this video and like and subscribe. We'd like to hear from you. Put your comments below, and we will see you next time. Bye.
Next time.